What's up everyone, my name is Ale. Welcome back to my world of stocks. In today's video, we're talking all about Disney, which has of course been one of the long-time holdings in my stock portfolio, and it just so happens that they reported earnings this month, which didn't look so great as not only did Disney Plus subscribers decline for the second straight quarter in a row, which is a bit of a shock, but we are also seeing the stock continue to fall, currently down well over half its entire value from the top in what has been one of the biggest crashes that we've ever seen in Disney stock. And so I've been getting a lot of comments and messages asking me to share my thoughts on all of it right now. And that's exactly what we're going to do in today's video. We'll run through those earnings. I'll let you know how I feel about their streaming business and the other parts of their business, how everything is going, where I see them heading in the future, and if I consider the stock to be a buy on this dip for my portfolio and as a long-term investor. So I hope you enjoyed the video. Let's not waste any more time. Let's just jump straight into it. Okay, now let's start with just a quick little update on the stock so you can see what I'm talking about here. But ever since reporting Q1 earnings last week, the stock has fallen by around 10%, which now leaves them down over 55% from the top, essentially at one of the lowest prices in the past decade. So just how bad were those earnings? Well, in my opinion, it was a bit of a mixed bag. Now, the biggest issue was for sure the decline in subscribers from Disney Plus, as it not only lost over 4 million subs in the quarter, but it was also the second straight quarter of declines after seeing explosive growth in the past. But while that is definitely a big deal and concern, you do still have to put some of this into context. First of all, the vast majority of the recent decline was caused by the Indian version of the app seeing a drop of 4.6 million subs after losing streaming rights to the Indian Premier League of Cricket. And yet, despite that, the direct-to-consumer segment still increased revenues by 12%, which was largely boosted by a raise to prices. And more importantly, it still managed to actually lower its operating loss by 26%, and that's huge, guys. That means that their streaming business is getting closer and closer to profitability, which is exactly what they brought Bob Iger back to specifically focus on. And not just that, but Hulu also gained 200,000 subs, ESPN Plus gained 400,000 subs, and when combined with Disney Plus, you're still talking about the second largest streaming giant in the world, right up there neck and neck with Netflix, and many times Disney overtakes Netflix. On top of that, I would also argue that the past few quarters have really sucked in terms of new content on Disney Plus. It's been very lackluster in my opinion, which seems to be something that they're addressing by supplementing the platform with added content that they're bringing over from Hulu, which is something that I've been arguing for ever since the launch of Disney Plus. Yes, it's great for kids and families, but if you want individuals to pay for it too, you need to have more of that adult kind of oriented content that you would get from Hulu or something like Netflix or things like that. And so I'm hoping that that gets boosted more so over time as well. But even without that, I would also argue that there's a lot more original content on the way that should be able to attract viewers in the coming years too. Now, right now is actually a horrible time for new content because of the widespread writer strike in Hollywood that is even affecting their upcoming Blade series, as well as the second season of Star Wars Andor. But over time, those issues should get resolved, and longer term, you're talking about huge content from both Star Wars and Marvel. On the Star Wars side, we're supposed to be getting a new Star Wars movie every couple of years, and I know that there's been several delays to that strategy, but there have also been talks of multiple movies being in the works already. And you also have the new Ahsoka series coming, The Skeleton Crew with Jude Law, the second season of Andor, The Acolytes, which is the first story centered around the Sith, a potential show about Lando, a second season of Tales of the Jedi, and even some weirder stuff like a droid story. Plus, there should be more work with Mandalorian and hopefully Boba Fett in the future too, because I hate how dirty they did Boba in his own dedicated show. That was a disgrace that they really need to make up for, in my opinion, because I'm a huge Boba Fett fan. I have Boba Fett stuff all over my house, and I really think they did a bad job with that show. I was expecting way more, but anyway, on top of that, you also have to look at Marvel, where you not only have big movies like Ant-Man and Guardians of the Galaxy, coming to the platform soon, but you also have huge projects in the future throughout Phase 5 and Phase 6, including Agatha, Loki, Deadpool, Daredevil, Blade, Avengers, Captain America, Ghost Rider, and a ton more. But also don't forget that Disney is much more than just a streaming giant. Their huge theme parks and resorts and cruise line businesses are not only making up about a third of the entire company, but they are also seeing giant recoveries coming out of the pandemic with a 17% rise in sales this quarter, which is also helping offset the 7% decline in TV networks. And that's exactly why that diversification matters so much for Disney, because if you have one part of your business struggling, we can help supplement that with other parts of the business and help it transition away into something else. And again, that's exactly what we're seeing with Disney. You've got people cutting the cord, so their TV networks business is struggling while they're transitioning away into online video streaming, where I actually feel that they have the most compelling packages out there. I mean, you've got Disney Plus for all your family oriented content, plus it's got Marvel, plus it's got Star Wars. Those alone are many times worth subscribing for just for that. Then you also have ESPN Plus for all the sports fans out there. You've got Hulu as kind of like a mini direct competitor to Netflix, kind of like Netflix Lite. And then of course you can still have some crossover between the platforms too. So overall, for the long term, I'd be very shocked if Disney doesn't just end up the clear front runner market share leader of that market, and that's a growing gigantic market for the future. The problem is more so in the short term right now, as they are still in a transitionary period and they're still kind of building things up, and that's where it's going to take some patience from investors. So is the stock a buy right now during this more difficult time and at today's prices? Well, in my opinion, I would say that it is a buy for long-term minded investors like myself. Because first of all, the quarter wasn't even that bad, as they actually met estimates on EPS and even beat on revenue too. The only real troubling sign was that drop in subscribers, but I've already addressed why that's not as important right now as making the segment more profitable. And year over year, you have to acknowledge the 13% rise in sales, the giant 170% rise in net income profits, and the change in cash of 265%. These are clear indicators that the recovery from the pandemic is well on its way. And yet the stock is still trading as if there is no recovery happening at all, down over 55% right now. And to be honest with you, I've always had this kind of general rule of thumb for Disney stock that anytime it trades below $100, that's probably a good time to buy, because you can see that history there that it just doesn't usually trade below 100 for very long. It's usually around like 20 to 50% higher than that. And I wouldn't even be surprised if it doubles up from here, especially over the next like 5 to 10 years or so, which I think is very reasonable to expect. You can see here that sales dipped in 2020 with profits turning negative. Then sales recovered as they also returned to profitability in 2021. Then sales soared to a record high last year and are now still expected to rise another 7% this year. Sure, that's not super high growth on the top line, but that's already close to $100 billion in sales. And more importantly, what you should really be focusing on is their recovery on the bottom line, which is looking absolutely fantastic to me. Over the previous 5 years, EPS was negative 18% on average, but over the next 5 years, it's expected to skyrocket by over 20% growth on average, which is probably why analysts still maintain way higher price estimates on the stock than where it's currently trading today, where it's even lower than even the most bearish analyst price targets. And I know that there are some issues and even some drama with the company and the stock. I mean, they're in the middle of a transition, they're in the middle of a writer's strike, and they're even in the middle of a lawsuit with Florida over politics. And of course, everyone has their own kind of views and opinions on these things. So you have to consider how you feel about it yourself, one way or the other. But just for me personally, when I look at it from just an investment standpoint, I just think that the stock is too cheap right here. It's trading for a PEG ratio that is over 30% cheaper than the sector. I just don't think that that type of valuation for a company like this can last over the long term. And again, that's just my opinion. Don't copy what I'm doing. Do your own research, make your own decisions. But for me personally, anytime I see Disney stock trading for under $100 a share, it's almost like an automatic buy for me. I still just really believe in them for the long term. But again, just my thoughts. What do you all think? Let me know down in the comment section. Share your opinion, any opinion you'd like on any of the things that we discussed today. And if you want to go even deeper into the conversation, maybe consider signing up for our channel's private Discord through the Patreon link down in the description, where we talk about stocks all the time. I'm on there every day and it's a ton of fun. But regardless, just for watching the videos, I really appreciate your support. It means so much to me. Thank you for stopping by. I hope you're all doing well, my friends, and I will catch you in the next video. Take care, everybody. Bye-bye.